morning, everybody. Welcome to the Trading Market Technicals morning call video for Friday, November the 8th. Big reversal day. It's all I could say is a big reversal day yesterday morning, actually, in the pre-market session. Let's run through the numbers real quick. Dow Jones down 152, NASDAQ down 74, S&P down 23, and the Russell down 19.5. Big move in the pre-market. You can see here, this is the 5-minute S&P E-mini future index. We had the ECB unexpectedly cutted rates. The European Central Bank, that literally propped up fuel for risk-on appetite. Free money is here, and it's here to stay. Soon as we had that, at 8:30, we had the gross domestic product, GDP, come out. That was better than expected, which hinted that the tapering will end sooner than later. So the free money then was going to end, and sure enough, we had a little bit of a sell-off in the pre-market. We broke these moving averages, and right around 9:30, the selling just continued all day. We did get a bounce off this key area of 752. The other key area is 747. Now, the big area in the SPX is also 747, but these are just intraday areas that I like to highlight, and sure enough, we hit that right to the penny. Rallied just underneath that 761, underneath the main pivot of the day, and then right into the close we sold off, and pretty much sold off into the close. Exactly what I was anticipating, that we were going to have some sort of reversal. It's just a matter of time, that you're seeing these major cracks in the walls, and you're saying to yourself, wow, when is this going to end? And sure enough, even myself, not believing what I saw, the previous day, the markets rallied on the euro, not doing much of anything, and just staying status quo, and then all of a sudden we get this huge pop-up, and then all of a sudden the euro actually really got decimated yesterday. So another big move for the euro. Looks like the currency markets are starting to wake up, which is a great sign. But I just wanted to show you this chart, and this is why that when you start looking to buy dips and continue to buy dips in this market where we're at these lofty levels, you can really take a major hit in your account. So really be cautious here. Now, one day does not make a trend. I do want to specify that, but we are in something here that possibly could be a tradable top. The big factor, non-farm payrolls that are coming out this morning at 8:30. I think it's just going to be all bets are off at the moment for today. We'll really see how the market closes at the end of the day, and then next week we should set the trend. Either we go higher or we actually start moving lower, and a tradable top, a local top is in place, and then we could move lower 3, 4, 5%. I'd like to see a 10% correction before the Santa Claus rally would kick in, and then that would give more fuel for a big move going into the end of the year. But again, remember, guys, we are at these lofty levels already, and this has only happened 8 times in 50 years before the Santa Claus rally started. So maybe, just maybe, that Santa Claus rally doesn't happen, and it's happened already. Again, just theory, nothing to trade off of, but just keep in mind, this is a big move lower, and we've been stressing, use caution. That's why I'd like to keep the bullets loaded, because once this happens and volatility starts to pick in, we can get aggressively short the market when that time comes, and that when we confirm that a top has been in place. Right now, nice little day trade from yesterday, looking to get short, and that was great. And as you can see, remember, I mentioned there's a lot of the high-flying names are really getting taken to the woodshed. You have LinkedIn, Google now starting to retrace. QIHU, Cena, Netflix, all of these high flyers, Tesla, they're starting to unwind. And it's one thing if money's coming out of technology and moving into something else, that's fine. But I also pointed out yesterday about the consumer discretionary stocks really starting to take off, and the ratio really moving higher. That's not what you want to see. You don't want money coming out of speculative risk assets into some safe haven sectors. That's different. That's hiding, parking money, and just waiting for a possible storm to come that the investor sees. And that's not what you want. You want money going into one part of technology into another, and that's not a good sign. And that's why I've been stressing for the last several weeks now. Be very careful. Not that you can't take long trades. Just use caution. Don't get too heavily long for swing trading, because anything could happen. Now, this just happened to be in the early session. But if you could imagine if something came out at 3 in the morning, you know the S&P down 20 handles right off the bat, that's going to hurt if you have a lot of longs and you don't have any hedges. And that's why I say stress, buy some protection, puts it very, very cheap. And they still are. But you know when you start getting above 15, 16, 17, those put premiums are going to be expensive. So again, just a little word of caution. All right, so let's go right into the indicators. I'm not going to get too much because we've seen it all already. Here is stocks above the 50-day moving average. As you can see, again, perfect example where we are at these 85, 90 percentile where stocks usually start to begin to sell off. We did get that sell signal, and we did sell off yesterday. And remember, guys, today's non-farm payrolls, so really news will trump the charts, but the charts are forecasting of what's to come. So I think there's going to be some further downside. Who knows? Maybe we might rally to 1780 in the S&P and then sell off. It's anybody's guess, and we're not here in a guessing game. We want to get our confirmation for the trend for the day, and then act accordingly. Okay, so now we have the. Let's take a look at the bullish percent SPX. I did put our line across. We did get that sell signal 2 days ago, and now we are in a confirmed sell signal in a bullish percent index of the SPX. So this here is a reliable indicator. Now, I'd like to see this get a little bit more away from the 8, and that'll give me a little bit better confirmation. Like if it takes this little pivotal low out over here, I'd like to see that. That's going to entice me to say to myself, okay, this index indeed is short, because you could get some whipsaws, like something like right around here. We had a little bit, but we could get a little bit of whipsaw. But indeed, this is on a short sell signal. Okay, this is the new highs, new lows I've been showing you for the last couple of days. As you can see, we are actually down 101. So we actually move lower again, and this is what I was saying, that when we weren't really taking out any highs where the S&P was taking out new highs, and a lot of the index, the Dow Jones, taking out highs. You could see that this was not. So this was a red flag. Now actually officially rolling over. So this is actually confirming that we have stocks not making new highs anymore. And we had it; they were making new highs, but not taking out new highs. So again, not a good sign. Tick actually moved lower, back below zero now. So if the tick continues to stay lower, that's not what you want to see as well. So breadth of the market starting to break down, starting to deteriorate a little bit. The McClellan oscillator, plenty of room to run to the downside before you even get oversold. Still in that neutral box, so we're down only 43. So again, still enough room to run to the downside. So this market has a lot of room to go, guys, before any type of correction. You would say that, oh, okay, we're done here. So be careful about buying dips this time. Again, aside from today, if the market does decide that it wants to move lower and continue to move lower, be very careful here. Okay, dollar. Let's take a look at the dollar index. Dollar index actually had a huge spike up, and that was partly due to the ECB rate cut. So the dollar popped up, but again, dollar holding above this area here. I think there's further upside for the dollar. Now, we did break this bearish symmetry. If you take a line all the way across here, or if you want to take the shorter line here, we did take out this bearish symmetry of lower lows and lower highs. So I do think that the dollar could move higher, and if that happens, it's not gonna go well for commodity stocks. And here's the gold. I just wanted to show you gold real quick. Gold is going to have a major move today, no matter what. Whether the non-farm payroll numbers are good or bad, gold will be affected by what the number comes out. So that's why I'm staying away from gold. Again, if gold can pop up and get up to this 1375, 1400 area, which I think is a big of a stretch, I'd be looking to short gold on the next rollover, on the next failure of that price area. Or gold could actually really start to move lower. And if it takes this area out here, I would still take a shot at gold, only because it's easy to manage here. Okay, but right now, no trade in gold. Take a look at the USO with the bullish percent energy. That is on a sell signal, and as you can see here, we are in some good area of support, and I'll show that to you in the other chart segment. And again, you can buy this, but it's a riskier play because you're counter trend trading. You are in the zone here. The crude oil future looks a little bit better than USO, but again, it does mimic it pretty much the same looking chart. Let's take a look at the chart segment now. And here's the E-mini S&P. Here's the daily. Big red engulfing candle. And usually when that happens, when you have a large engulfing candle, you usually take back a little bit of it and then start to roll again. But remember, look at all the moving averages here. We have bullish symmetry, all headed lower. So when one starts to roll, then the other one will follow eventually. But you got plenty of room and plenty of support actually as you go down. So, if you break the 20, you're going to have the 50, which would come in at this area here, which was resistance, now going to act as support at 1728. So these are the areas that I'd be looking for on the way down. And again, even if we caught this lower trend line at 1668, you would still have this long-term bull market intact. So remember, a healthy pullback it's healthy here, so the markets can unwind itself and then look for another move higher. Okay, but again, the E-mini right now, big engulfing candle. This was the largest move in over a month. It had to be. It was sometime in early October. So this is over a month. This move happened. So again, and we took out a good 7-8 days of trading in one day. Remember, fear is faster, moves faster than greed. Okay, so let's take a look at the chart segment. And again, just a quick look at the GLD here. Really no trade. If we start taking this out on a big move, the next pop up into resistance would be a good short, or a better short really up at these areas here. Right now, gold I'm staying away from for today because of the non-farm payroll numbers. Here's the USO. Crude oil will be affected as well. We are into this big area of support, as you can see here. And again, for a trade, if you like crude oil for a trade, you can take it. But remember, it is going to be affected by what non-farm payroll numbers are going to be. All right, here is the spiders. Big move lower. We are still above the 20. We did break. Finally, we broke the 8. And as you can see here, we took out a pretty much good 7-8 trading days of gains and losses, and really just non-event here, just all doji stars. But again, indecision. Now we're starting to break lower. Today, will the bears capitalize on this move, or do we just move higher again? And again, it's possible it could go either way today because of what's happening with non-farm payroll numbers. But so far, I like what I see, that we're starting to get a distribution day on heavy volume. So I would like to see a continued move lower, at least back to the 170 area, and the spiders would be nice. And the IWMs. Now, this has been the weakest of the 5 sectors that we follow. Risk is definitely coming off. You could see this. The IWM's Russell 2000 ETF is a good gauge of risk. And as you can see here, we have been breaking down ever since. We had the top here back in on 1030. And this is just a nice bear flag that broke the bear flag, and we're already at the 50-day moving average. So to me, next stop's going to be this uptrend line from November 2012 lows. That's really where the target's going to be, or could actually even go further and maybe test the 200. This is definitely the weakest and actually moving lower here. Okay, so this is something that we need to keep an eye on as well. The diamonds, the Dow Jones, not so bad, but again, once everything else starts to move lower, the Dow Jones definitely going to move lower. And look at what happened. We had a move higher, made all-time highs, and then just literally rolled over again. And this is what's happening here. You're getting these crazy moves, and we're starting to get a pickup in volatility. And that's why I said keep the guns loaded. Let the market go nuts, and after this event risk is out of the way, and then you could start putting your trading plan together and start acting on it with your positions according to what you want to put on your plan. As you can see here, JP Morgan really not doing much of anything, and that's not a good sign. It's not what I like to see. Transport's taking it on the chin. Big move lower, and that is going to help fuel equities lower if the transports continue to sell off. As you can see here, 20-day moving average. It does get affected by crude, so you want to be looking at what crude oil does, but if crude oil gets a real big bid, then the transports are going to start to sell off, and also the airlines and the trucking company and the railroads will follow suit as well. Here's the XLF. Now you can see we're starting to break down here. Goldman had a nice move out early in the morning, and then that just had succumbed to some selling pressure as well as the general market did. Let me show you Goldman. As you can see here, big move up yesterday, actually challenged the previous day high, and then literally just fell out of bed. Now we're back into the zone again. So if you didn't get stopped out, your stop would be either below here at 155 or would be below this little pivotal low area. So depending on your trading plan, I still like Goldman here, but if the market does start to sell off, Goldman is not going to really do too much of anything but move lower with the market. So just keep that in mind. Apple, again, Apple selling off, Google selling off, Netflix selling off, LinkedIn selling off, Tesla selling off. All of the high flyers are really getting hit hard. Money's coming out of them logically because we had such a huge move in them. So you have to say, where's that money being parked? And if you're seeing utilities making new highs, and the consumer staples making new highs. That's not what you want to see. Now money's being parked into these safe haven sectors because a lot of these market participants are saying, hey, I think we have we have some storms coming, and I don't want to be I don't want to be riding through those storms, so they're taking their money off the table. Okay, and here's the IGN. Just want to let you know the head and shoulders pattern working out nicely. Down, we did have a gap lower, and now we're breaking lower. So support, the target is 2706. Does it get there? Who knows? But it is a target and is a valid bearish pattern here, and that's part of technology. Lastly, the Qs. Look at the Qs. Really just got decimated here, and again held up for 8-9 days. Actually, even more than that, and we took it all out in one trading day. Okay, so this is going to be interesting for today, guys. Remember, once the tapering is going to be sooner than later, the free money is over. So this market is only being propped up because of what the Fed is doing. So you have to realize that. And even though you're day trading, you still need to understand what the fundamentals are of this market and what's going to happen in the coming weeks and months ahead. All right, so you can plan yourself accordingly. All right, guys, happy Friday to you. Have a great weekend. Be safe, and we will talk to you on Monday. Take care.